Japan's trade balance gap continues to widen. Inflation in the UK is not going to ebb away. The Reserve Bank of New Zealand has put its cash rate on a hold. Nevertheless, such news is still not market catalyst today. Markets are looking forward to the minutes of the May meeting of the Fed Reserve. It means that risk sentiment is paused before its publication. As expected, UK inflation declined from a 2.3% in April from a 3.2% a year ago. In theory, this data should weaken the pound sterling and, in turn, the single European currency. After all, fading inflation greatly increases the likelihood of the Bank of England's rate cuts in emergence at the next meeting. However, core inflation ended up higher than expected. The core CPI climbed to 3.9% from a 3.6% in the annual terms. The figure still looks too strong and makes it almost impossible to exclude the possibility of a rate cut in June. That the Bank of England will most likely make its first rate cut no earlier than in November. The same timeline has been suggested for the first rate cut in the United States, and today the markets will try to find additional clues of a dovish or a hawkish here in the minutes of the latest Federal Reserve meeting. Market participants have already grasped the idea of the American regulator voiced in the similar comments from the Fed policymakers. This approach was again underscored yesterday by another Fed official, a member of the Fed Reserve Board of Governors, Christopher Waller. As there are no signs of a significant weakening in the labor market, I would like to see several more months of a good inflation data before I can comfortably support monetary easing, he said. Therefore, the US dollar relative to its six main rival currencies is trading today higher within the intraday corridor between 104.5 and 104.7. The main arguments in favor of a dollar stability are now the Fed Reserve's appeal for caution and the negative geopolitical background. At the same time, Wall Street indexes are rising on strong corporate reports. For example, the S&P 500 not only updated its historical high yesterday, but also is carrying on with its rise within the intraday corridor of 5,297 to 5,324. While Wall Street is breaking new growth records, the euro-dollar pair prefers to play it safe and trade cautiously. In the first half of the trading day on a Wednesday, the most popular currency pair consolidated along 1.0850. Moreover, there is also no consensus among ECB policymakers about further monetary easing after the June meeting. So, our analysts believe that the euro will remain flat until the release of the Fed minutes of the recent policy meeting. However, the wave of volatility that may rise after the publication of the document may keep the currency market in suspense for much longer. The euro is expected to go out of the red corridor of 1.0845 to 1.0866, in which it's trading today. In this situation, the euro-dollar pair has to settle about the resistance of 1.0900 at the end of the day for a further bullish move. In this case, we could talk about a new stage of the euro's recovery. As for the alternative scenario, if the instrument holds below 1.0840, this could strengthen the pair's position and push the price towards the critical support of 1.0800. After all, the euro's rate is highly dependent on the US dollar strength. At the same time, there are no growing doubts in the market that the ECB will continue to cut interest rates after June. Now, only a few other ECB policymakers believe that a rate cut in June is realistic. This viewpoint is shared by the governors of the central banks of Germany, the Netherlands, Belgium, and Latvia. Regarding the inflation forecast, Bundesbank Governor Joachim Nagel said the following: there may be months ahead when inflation rises slightly, since some prices tend to fluctuate in particular energy prices. Overall, I expect inflation to extend its decline towards our 2% target and reach it in 2025. In the last 24 hours, commodity markets were also influenced by the information background, and the alarming tone of the news decreased, so did oil prices. Thus, the benchmark Brent grade fell even below the critical support of $82 per barrel. But at the same time, the price still simply shifted to the lower border of the range, from which it has not been able to escape for several weeks. Later on, the price rebounded towards the upper border of this range, that is $84 per barrel. To return to the game, the peers need to stabilize the price below 82 during the day. And in this case, Brent crude may even begin towards support at $80. Otherwise, the price will be looked again in the range of $82 to $84. And you have watched the Market Review by InstaForex analyst for Wednesday, May 22. Subscribe to InstaForex TV channel and we keep you updated on all market developments. Feel free to ask any questions and leave your comments. See you online tomorrow.